Hello, everybody, and thank you for joining me today for this business management webinar for childminders. My name is Jacqui Burke, and I specialise in providing business and management training and support for the early years and childcare sector. So I'm delighted to be hosting this session today. So the purpose of today's session is really to provide you with an overview of a business planning process that you can use as a childminder, regardless of whether you're just starting up as a childminder and are just kind of making your initial plans, or whether you're an existing childminder, because the focus of this is on the steps you need to take in order to ensure that you're more sustainable. So that's applicable whatever stage of your childminding business you're at. So I hope that you enjoy today's webinar. So I'm going to start off by giving you just a little bit of an example of how I think about business planning. I think about being on in a business as a bit like being on a journey. You know, it's a business journey. And I liken it to being in a car, going on a car journey. And if you think about it these days, when we're going on a car journey in a direction that we've never been before, what we will tend to do is we will program our sat nav to help us to go the right way, to help us to plan for our journey, things like making sure we've got enough fuel in the tank and know where we're going to take breaks and things of that sort. And it helps us, our sat-nav also helps us when we have to make significant decisions about, do I go this way or do I go that way? So my suggestion is that the reason being in business is a little bit like that is because we have to make all those same decisions when we're running a business. So I think about business planning as a little bit like creating a sat-nav to help you to plan your business journey. So putting some things in place that will help you to understand the direction that you're going in, will help you to plan for that journey and make sure that you've got the resources and what you need, such as the money in the bank, to actually make it work. And also will help you when you come to have to make significant decisions in your business situation about, do I make that decision or do I make that decision? So that's why I think it helps in your mind to think about it as a bit of a business sat nav. And like any sat nav in your car, it's only useful to you if you actually refer to it. If you have your sat nav shut away in the glove compartment, it's no use to anybody, is it? So the same thing applies really in a business context. If you write a business plan, and some of you may have done this when you first started your childminding business, you do need to get it out of the drawer and refer to it and check it from time to time to check that you're still on track. So what's the first thing we need to do when we're actually setting our sat-nav? Well, if you go back to your car situation, the first thing you do is you tell your sat-nav where you're trying to get to. So you program in your goals or your objectives for your journey. Well, guess what? We do exactly the same thing when we're setting our business sat-nav up. So in business terms, we talk about this as setting SMART goals. So a little bit of a reminder, you may have come across the idea of SMART previously, but a little bit of a reminder of what that means. So when we're setting these goals, they need to be specific. So it's a little bit like with your car sat nav. If you tell it to take me to London, it will take you somewhere in London, but not necessarily exactly where you want to go. It'll probably take you to Westminster Bridge or somewhere like that. So when we're programming our sat-nav in our car, we have to be much more specific, don't we? And we put in a specific destination, an address or a postcode or something like that, and then it's much more likely to get us to where we need to go. The same applies in a business planning situation. So we need to make sure the goals we set are specific. We need to make sure that they're measurable. In other words, how will we know when we've got there? How will we measure our progress and check that we've been successful. And again, your sat nav does this for you because it tells you you've got so much distance still to go. And then as you get nearer, it will tell you your destination is coming up on the left in, half a mile or whatever. It's important to make sure that your business goals feel achievable. If they feel unachievable, it's very demotivating and you'll probably give up before you've even started trying. And they need to be realistic. So it's all very well saying, oh, actually, I'm going to expand my childminding business and I'm going to have 12 children. But actually, if you don't have the space for 12 children in your setting, then that's just not realistic, is it? And finally, your goals should be time bound. So you should set yourself some time limits and some deadlines when things are going to be completed or achieved, or at least when you're going to get to a significant milestone where you can check and say, okay, where have I got to? So a bit like going on your journey, if you haven't got to this particular point within an hour, that you're probably going to be late. Okay, so that's setting SMART goals. So what does that actually look like in practice? So I'm going to give you a couple of examples of where we've written some goals and they're not very smart. They're a bit wishy-washy, a bit vague, and what you can do to actually make them much smarter and much more useful for your business planning. So here are my examples. So the first one, we would often say, my business goal is to be more sustainable. Well, that's all jolly good, but it's a bit like saying I want to get to London. What does that actually mean? So when you're writing your business goal, if that's your goal, you need to be specific and say, I want to exceed X amount of profit. So that's being specific, and you can measure that, can't you? Because it's about the profit in your bank, in your accounts. And I want to have achieved that by the end of the current financial year. So that's putting a really specific deadline or timeline onto that. So that's then much more useful because you can measure really clearly whether that's happening or not. Similarly, to improve my reputation. Well, that's very kind of wishy-washy, isn't it? So you could measure that by saying something like, to achieve 80% average occupancy over the course of the next 12 months. So that's very specific. It's measurable because you can measure your occupancy. Does it feel achievable? Well, I guess it depends where you're starting from. If you're starting from, I've got 0, then okay, does that feel achievable? Maybe you need a longer time scale, but if you're already at 50%, maybe lifting it to 80% is very achievable. And you've got a time scale in there again. Or finally, the last one might be, I want to expand my provision. So again, that's a bit wishy-washy. So you can smarten that up by saying something like, I intend to grow my business by 3 children by taking on an extra assistant by September 2022 or whatever the year might be. So again, this is very specific. It's measurable, 3 children. And we've made it realistic by actually thinking about how are we going to have the capacity to take on an additional 3 children within ratios. So here we've identified the possibility of taking on an assistant to make that realistic. And we've got our timeline in there, our deadline in there as well. So have a look at your own business goals, set yourself some general ones, and then see what you can do to smarten them up so that they really become useful in helping you on your business journey. So the next question we need to ask when we're on our business journey is, what do we need to focus on to make sure that we actually pay attention to the really important things that are going to help us to actually achieve our business goals? And to do that, I recommend that we build what we call a SWOT analysis. So you may have come across the idea of a SWOT analysis previously. So this is 4 simple headings that we need to ask ourselves when we're in business. So first of all, what are our strengths? So what are the things that we're really good at? What are our weaknesses? So being honest, what are the things that we're not so good at? What are the potential opportunities that might exist that we could take advantage of? And what are the potential threats, the things that could be a real risk to your business, that if they go wrong, they're likely to kind of knock you off course completely. Okay, so you can complete a SWOT analysis literally on the back of an envelope. Just look at those 4 headings and just come up with whatever pops into your head. But I'm going to suggest that we use a slightly more analytical method to do that, which will give you a much more thorough and robust SWOT analysis that again becomes much more useful for a business point of view. And the way that we're going to do that is to use another little tool that will give us some headings that will help us to think about our strengths, weaknesses, opportunities, and threats. And this is the tool that we're going to use. So this is something called a 7S analysis. And I've given you the reference there if you want to look up where the origins of it come from. And it just gives us 7 simple headings, all beginning with S, to help us to think about our early years business, our childminding business, and what our strengths might be, and what our threats and what our opportunities and weaknesses might be. So we're going to look at each of those and in an actual example to see what this actually means in practice. And then that gives you a template to work with that you could actually use for your own childminding business. So here's my example, and I'm going to talk you through this a little bit. So first of all, I'm going to start in the middle because that seems like a good place to start. So every childminding business should have a really clear sense of your shared values, those things that really matter to you. You might talk about it in terms of your ethos. So for this example childminding business, they consider that they have a strength in this area because they've got an ethos and a vision that's really clear in their own mind. However, they see as an opportunity for the future because they've decided that they're taking on assistance to help them to grow their business. This childminder has recognized that there's an opportunity for her coming up in the future to share her ethos and her vision with the assistants as part of their induction. So that's an opportunity for the future. Then going to strategy. So the strategy is asking the question, have you got a clear plan as to how you're going to go about achieving your vision and your ethos? So this example childminder says, well, yes, I have a clear strategy to double the size of the business by employing 1 or more assistants. And this childminder has that clear on their mind, and they've written it down and worked out how they're going to do it. So they've got a strategy. However, they've identified as a potential threat that their hours, their operating hours, may need to change in the future to be more suitable for parents who are increasingly working flexible hours, maybe hybrid working, where they're doing a mixture of days in the office and days at home, following on from COVID restrictions. So that's a possible threat. If they can't find a way of changing their hours to suit the needs of parents, parents might go elsewhere. So then under the structure heading, so this is about your premises, where you actually operate. So this childminder has identified as a strength that they've recently extended their property, and that now provides better space for planned expansion of the business. It gives a new layout which facilitates free flow activity. They've adapted their garden to facilitate some more forest school activity, and they're maintaining all their equipment to a high standard. So that's all a real positive. So then on to the systems section. So this is about what systems and processes do you need to use in your business to actually make it operate. So our childminder has identified as a strength that they've got really good systems for communicating with parents, for invoicing and collecting fees, for tracking EYFS progress of children, policies and procedures are in place and everything's up to date. So that's all brilliant. However, they recognize there is a weakness, that they have no experience previously of operating as an employer. So in terms of this idea of taking on assistants, they're not sure how to go about proper recruitment, how to manage PAYE, pay as you earn, how to performance manage somebody. They don't really know the finance systems that need to be in place, etc. So they've recognized that as a weakness going forward. So then on to staff. So this is all an opportunity because this person doesn't employ staff at the moment, but is now looking at taking on one or more assistants. And they've identified as a real opportunity that they would like to take on an assistant who speaks Polish, because they've got a lot of Polish families in the local area who that would really appeal to. In addition to that, they also have that opportunity to consider flexible hours, flexible working to meet the needs of those parents that need more hybrid childcare provision in order to support their working pattern. So that's all an opportunity for the future. And then skills. So here again, we've got a mixture of strengths and weaknesses. So our childminder here recognizes some strengths, that they have regular CPD sessions, and most recently they've gone through training and accreditation to operate a forest school environment, which is great. That's a really lovely selling point. But they recognize a weakness, that they're going to, in the future, they're going to need to do CPD planning for this assistant that they're going to take on, and that they don't really have any experience as far as HR, personnel, people management, all that kind of stuff. So they're going to need to get some training to build their skills in that area. And then finally, the final S is about style. So this is about, again, just your how it is in your setting, your working style. What does it feel like to be in your childminding business? What does it feel like for parents to engage with your business? And what will it feel like for your assistants when you take them on? So again, a mix of strengths and weaknesses. So here the strength is that they're clear that they look to create a fun, exciting environment for children that feels like a home environment for them, full of creativity and lots of adventures, and that they believe that's a real strength in terms of how it feels for the children that come to their setting. But as a weakness, they recognize they haven't yet considered what their style is going to be as an employer. What sort of an employer do they need to be like? So again, this is something that they really need to do some work on when they look at taking somebody new on. So this is a very specific example for this childminder, but use that template of those 7 headings for your own childminding business. And that enables you to then identify your strengths, weaknesses, opportunities, and threats. So what do you do then? So then, depending on what you've identified, you then ask yourself 4 key questions. So first of all, sorry, my slide has jumped forward one. What actions should you be taking now in order to preserve, enhance, or build on your strengths? So this is why it's important to identify your strengths as well as your weaknesses, because they're going to provide your strong foundation for the future. So you want to make sure whatever happens, you don't lose those strengths and you build on them as your foundations. So what actions do you need to take now to hold on to those and build on them? What actions should I take now to reduce or completely eliminate my weaknesses? So some of those weaknesses, they might not be able to get rid of completely, but at least you can reduce them and improve on them. What actions should I take now to take advantage of my opportunities? So this childminder has identified a number of opportunities, some associated with taking on an assistant and expanding, and then some associated with thinking about how she's going to attract new customers to her provision. So the question here is, what do you need to do now to make sure that all happens? And then finally, what actions should I take now to eliminate or mitigate my threats? So some of the threats you might be able to get rid of completely and eliminate totally, but very often The threats are things that are happening outside of your control. So we're not in a position to eliminate them completely. So the best we can do is mitigate them, which simply means reduce the negative effect that they might have on your business. So this is how you build your plan. And you'll find if you go onto the C Zone that there's a template on the C Zone that enables you to go from your SWOT, doing your analysis, and then creating a really strong action plan that you can work with as your sat-nav going forward. So do take the time to visit the C Zone and have a go at doing that for your business. So I'm going to move on to a slightly different topic now and think a little bit about the key factors that impact on our sustainability as a childminding business. And there are really three key factors that I'm going to talk about. One is your staffing, so the people or person and the costs associated with that. One is your premises, your home, your equipment, and costs associated with that. And the third one is your pricing, how you set your pricing in order to generate an income for your business. So I'm going to look at each of those. And I'm going to start by focusing on this little issue that we've talked about already here. If your intention, if your goal is to grow your business in the future, potentially by employing assistants. So let's just talk about what this looks like in practice and in legal terms. So I've got a little quote here that says, I employ my assistant on a self-employed basis. Now, I've had this conversation with many childminders over the years that have told me, yes, I've got an assistant and I employ them on a self-employed basis. So I don't have any of this employer stuff that I have to deal with. Now, there's a problem there, because that may or may not, probably not, be legal. So you need to check before you consider taking on an assistant, or if you already have an assistant, whether it is legal for you to operate with them on a self-employed basis, or whether legally you have to employ them. Now, there's an easy way of doing this. HM Revenue and Customs have provided a checking tool, and I've put the link there up on the slide. And if you go to the checking tool on gov.uk, it goes through a series of questions about the nature of your relationship with your assistant and your expectations of that person in terms of their working role. And then at the end, it will tell you whether legally you must employ that person or whether you can use their services on a self-employed basis. So please make sure that you use that tool to ensure that you're not breaking the law. If the tool determines that they have to be legally employed, then the next thing you can do is go onto the ACAS website in order to determine which class of employment they come under. So this is where it gets a little complicated, because there are actually two classes of employment in the UK. One is as what we classify as an employee, which gives full access to all employee rights and benefits. The other is what is classified as a worker. And a worker that status sits halfway between self-employed and employee. So in that situation, as the employer, they earn certain rights and benefits from you, but not the whole thing that an employee would earn. So again, there's a checking tool, and you would need to go onto the ACAS website, use that checking tool. It asks you questions about your relationship with that individual, and then it will determine for you whether they are an employee or whether you can classify them as a worker. So the outcome of those checks, both of those checks, will determine what their rights are and what your responsibilities are as an employer. And it's really important that you carry out those checks to ensure that you're working legally. So when you take on an assistant, if you are employing them, there are potential costs that you need to be thinking about, and you need to plan all of this before you obviously take somebody on as an employee. Those potential costs that you need to factor in include things like income tax that you will have to pay on their behalf, employers' national insurance that you have to pay for them out of your budget, statutory redundancy pay. If you were ever to need to make them redundant, they have a legal right to statutory redundancy pay, and that can come to quite a bit of money. Again, I've put a link there in the third bullet point. There is a tool to calculate how much that would be. And if you're already an employer and an assistant, I would recommend that you go onto that simple tool. It's ever so easy to use. All you need to know is the person's age, the date they started working for you as an employee, and how much they're paid per week. And you put those pieces of information in, and it tells you if you made them redundant tomorrow, this is the amount of money you would have to pay them. You may need to factor in sick pay, maternity pay, pension contributions if they're paid over a certain amount, and employer's liability insurance, which as an employer is a legal requirement. So there are all sorts of costs you have to factor in before you take somebody on as an employee. If you want to work out how much the tax and national insurance would be that you'd be obliged to pay, again, there's a checking tool. So you can go onto the gov.uk website and you can manually check how much that would actually come to, depending on what you've determined that you're actually going to pay them as a wage. So it's really, really important, because all of these are statutory payments. They're not optional. They're a legal requirement. It's really important that you check these before you take somebody on, and that you put aside enough money every month from your income to cover all of those payments, so that you make sure that when the bills come in, you've got the money there to pay them. Okay, so a little bit further about staffing costs. So some things that you can think about to help you to manage your staffing costs. There are two things really. One is think about the nature of the contract that you use with your assistants. So again, a contract of employment is a legal requirement for them, regardless of whether they're an employee or a worker. And you can manage and control your staffing costs a little bit more easily if you use flexible contracts of working rather than permanent full-time contracts. So flexible contracts will include things like a part-time hours contract, or a term time only, or even a holiday time only, or an annualized hours contract, or even a 0 hours contract. So all of these are possible and legal and can work really, really well for you in terms of being able to use them flexibly for the hours that you need them, and not have to pay them for the hours when you don't need them. If you're not sure what any of those terms mean, again, go onto the ACAS website and you will find a really good guide there to different types of employment contracts that you can use that talk about all these different flexible contracts that are possible for you to use. So really good examples there on how you do that. It's also really important that you look really carefully at your ratios. If you are operating because you've chosen to with more generous ratios than the Ofsted guidance indicate that you need to, then do be aware that you'll definitely find that the government funding won't cover your costs. The government funding for early years is worked out on the basis of Ofsted ratios. That's how it's been calculated. So those of us who operate with more generous ratios, it simply won't cover your costs. You need to charge fees to enable you to have those more generous ratios if you want to do that. So that really brings us to starting to talk a bit about pricing and fees and things of that nature. But before we go there, I will just mention briefly one other element that impacts on your costs, and that is your premises, your home and your equipment. So it may be important if you are using your home as a premises for your childminding business. There are people you may need to inform. You may need to inform your lender if you have a mortgage. It's never usually an issue, but they like to have a little note on file. You may need to inform your landlord if you are renting your premises, just make sure there's nothing in your contract with your landlord that prohibits you from doing that. You may need to inform your local authority in case if you're using a separate part of your premises. Just be careful that it doesn't end up being counted as business premises, because then you're getting into the realms of business rates, and I really wouldn't recommend you go down that route. If you're using a part of your home, as I am here, this is my office, but actually the rest of this room is actually a part of my home. So it's used as a part of my home. So it's definitely not applicable for business rates. And you might also need to inform your house insurance people that you are running a business from home, and they will ask you questions about what sort of business is it, and do you have customers that come onto the premises, which of course you do because you're childminding. There may also be tax implications when you come to sell your home. Again, you can avoid that issue by making sure that the part of your home that you use for your childminding business is also a part of your home, that it's not a separate business premises that's only used for your business. Because if you were to do that, then potentially when you come to sell your home, with that separate business premises, that bit would be treated differently and potentially generate a capital gains tax liability when you sell. So you don't want that to happen. So make sure it is actually part of your home. So then on to pricing. How are you going to cover all of these costs? Well, you need to think about what you're going to charge for your prices, for your fees. And there are some factors that we should be taking into account when setting your prices. So the first is about your customers' limitations and expectations. So this is about really understanding the type of families that you're attracting to your childminding service, and understanding, are they families who are more disadvantaged and perhaps reliant on benefits and really can't afford very much in terms of fees? Or are they more affluent families who can afford to pay a bit more? But also don't make assumptions about their limitations, because sometimes actually families who we think perhaps can't afford a bit more choose to prioritise their childcare provision because it really, really matters to them, and they will go out of their way to make sure that they get the very, very best for their child. So also recognise that for some families, their expectation is actually they expect to pay a little bit more. And actually charging them less, feels a little bit cheap to them. Now, we all know a less expensive provision can be equally as good as a more expensive provision, but you know the sort of customers I'm talking about, those that would perhaps go to Waitrose to do their shopping rather than Lidl. And forgive me, I shop in both of those stores, so I hope I'm not insulting anybody. But these are the sort of customers that would prefer, if they're having a dinner party with their friends, to sit there and rather than say, oh, little Jessica's in the nursery down the road, it's ever so cheap, you know. They wouldn't want to say that. They'd want to say, oh, little Jessica's in the nursery down the road. Terribly expensive, of course, but it's very good. And it's that sort of thing. So also think about the going rate in your area. So you need to do your market research, you need to do your competitor research and find out a little bit about what other places are charging. And when you do market research, do just double check that you're comparing like with like, because it's difficult sometimes to assess exactly what's included in their fees and is it the same as you include. Think also about what in marketing terms we call your USPs. And your USPs are the things that make you different. They're your unique selling points. So what are the things that are unique about your provision are what we call your differentiators, the things that make you different, that make you stand out from the rest. And think about, are you able to offer something really special that actually might justify you charging a higher fee or charging for some extras? So remember our example that we looked at previously. If she recruits a Polish-speaking assistant, maybe that's a differentiator. Maybe she becomes the only childcare provider in the area that is specifically providing a provision where there are Polish language skills for those parents. And that might be something that those parents are prepared to pay a little bit extra for. And then finally, you need to understand what your break-even hourly rate is. So we're going to do a little bit of practical work on that. And you are going to need to grab your phone and get your calculator out. Okay, so this is about checking that you are financially sustainable. And the most important message here in terms of knowing whether you're financially sustainable or not, whether you're covering your costs, is don't guess. Don't put a finger in the air and say, well, yeah, I think I'm making enough money to cover my costs, because that is an absolute recipe for disaster. You know that from your personal budgeting at home. So you need to do the maths. There is no substitute for doing the maths. So the first thing you will need to do is really understand where your income is coming from and how much of your income is coming from different sources. So it's a really good idea to maybe do a bit of an analysis, maybe do a bit of a pie chart and work out, you know, how many children you've got coming to your setting. For each child, how many hours do you receive of funding for those children? How many hours do you receive of fees for those children? How many of those hours do they do? What the different rates of funding are that you receive for your 2-year-olds and your 3-year-olds and all that kind of thing. So really work it out carefully. And it's a good idea to do that calculation over a whole year, because we know, don't we, that our occupancy tends to fluctuate seasonally through the year. So you don't want to just look at 1 month, because that might not give you an accurate picture for what happens through the whole of the year because of those seasonal variations. So figure this out for the whole year. And it's then important that you factor in other sources of income. So in addition to your basic funding and your basic fees, what other income do you have in your childminding business? And I'm just going to give you a reminder here. You know this, but I'm going to remind you anyway, that you absolutely must be charging for extras. So the government expects you to charge for extras. When they created the 30 hours funding, this is what they put in the operational guidance. The government funding for 30 hours is intended to deliver 30 hours a week of free, high quality, flexible childcare. It is not intended to cover the costs of meals, other consumables, additional hours, or additional activities. Parents can therefore expect to pay for any meals offered by the provider alongside their free entitlement and other consumables and additional activities offered by the provider, such as nappies or trips. So we all know that guidance, or at least we should do. And it's really, really important that you operate in this way. Otherwise, the risk is if you do rely on that government funding, the likelihood is that if you are offering some extras, you won't be covering your costs. And that's obviously not good. We understand that there are issues in terms of parents that are just buying funded hours from you, and you need to obviously find a way of managing that in an appropriate way that works for you and works for your parents. So once you've done that, sorry, I'm having a little bit of an issue with my slides moving on here. Right. Once you've done that, you can then do a really good calculation of your costs and really, really understand your costs once you know your income. So this is kind of the other side of the equation. Using a bit of accountancy speak here, but every business should work out what its fixed costs are. So your fixed costs are your costs that will stay the same all year round, regardless of your occupancy. So regardless of those seasonal peaks and troughs. So these will typically be things like your mortgage, your rent, your rates, where are we with electricity bills? They're definitely not staying the same, but your utility bills, things like your registration fees, things of that sort. You've got to pay for them regardless of whether you've got one child or 5 children. Then we all have variable costs. Now, our variable costs are the ones that fluctuate through the year depending on our occupancy. So these will be typically things like food and other consumables and trips and things of that nature. So these you'll have to spend more at some times and less at other times, depending on the number of children that you've got. We should also have what we call contingency. So contingency means putting a bit to one side in case of one-off costs, things that come up unexpectedly that you hadn't anticipated, maybe a training program that you suddenly want to go on that you hadn't budgeted for, or something breaks down and you need the money to replace it. And this is also important for annual costs, those costs that just come up once a year, maybe like your insurance premium or your registration fee or subscription fees to a membership organisation. So putting a little bit aside every month is really helpful to enable you to do that. So for example, I don't work in August, so I make sure that through the other months, I put a little bit of money aside each month to make sure I've got money to cover my fixed costs during August. And then finally, your statutory reserves. So you remember all those statutory bills that I mentioned earlier in terms of things that you have to pay, particularly if you employ somebody else. You should be putting a little bit of money aside every month to ensure that you have enough to cover things like tax that you have to pay on behalf of an assistant, as well as your own tax and national insurance, statutory redundancy pay if ever you were to have to make them redundant. So putting a little bit to one side is really important. Okay, so what we're going to look at now is how we actually use all of that information, the information about our income and the information about our costs. And what we do is a little bit of a balancing act to make sure that we are breaking even, which simply means that we're covering our costs with our income. And I'm going to give you a little bit of work to do here. And I'm going to take you through an example. And at that stage, you might like to pause the video and have a go at actually working through the example. Have your calculator at the ready. So this is my example. So Lizzie looks after 3 children and they come to her for different times. Josh comes 8 till 5, Monday to Friday. Carly comes 8 till 2, but only Monday to Wednesday. And Priya comes 3:30 to 6:30, Monday to Friday, but only during the school term, which we're taking here as 39 weeks of the year. Lizzie closes her childminding business for 4 weeks of the year for her own holidays. She has calculated that her business costs, including the amount of money she wants to put in her own pocket, which she calls her wages, comes to £20,000 a year. So to pay herself and pay all those other costs, 20 grand a year. So your question to go away and calculate is, how much does Lizzie need to charge per hour in order to break even? Okay, and we'll assume here, let's take government funding away for the moment and just assume she's just going to get this money in terms of her fees. So how much does Lizzie need to have coming in per hour, per child, in order to cover her costs? So at this point, you might like to pause the video and have a go at working that through. Okay, welcome back. So I don't know where you got to with your maths, but this is how the calculation actually looks. So first of all, we need to think about how many hours each child does over the course of the year. So we calculate that Josh does 9 hours a day, 5 days a week, and he's coming 48 weeks of the year. Remember, not 52, because Lizzie is closing for 4 weeks. Shows she's not charging Josh's mum and dad for her holiday time. So it's 48 hours of the week. And if you multiply those together, you get 2160 hours. Carly comes from 6 hours a day, but only 3 days a week. And she also comes all the way through the year, so 48 weeks of the year. Priya comes just for 3 hours, and she comes 5 days a week, but she only comes 39 weeks of the year because she's term time only. So that tells us how many hours of childcare provision we're actually providing over the course of the year. So if you add all of those up, Lizzie is actually selling 3,609 childcare hours over the course of the year. Now, remember, Lizzie worked out that she needs 20,000 a year to cover her costs and pay her own wage. So if you take that £20,000 and divide it by the number of hours that she is billing for, that tells you that she needs to be charging a minimum of £5.55 per hour in order to break even. In other words, in order to cover her costs and leave her with that much money that she wants in her pocket. So if her funding is less than £5.55 an hour, she needs to be charging additional fees for additional hours to cover that cost. If all of this is coming from fees, then that's what she needs to be charging. So what I'd suggest that you do is go away and have a go at replacing Lizzie's figures with your own figures and see what that figure comes out at for you in terms of what you need to be charging and receiving as an income for your childminding business in order to be covering your costs. Okay. So I'm going to move on to the final section of today's webinar, which is all about good financial management. So why is this important? Well, good financial management does a number of things for us. It helps you to manage your business, first of all, which is what we're focusing on today, and ensure that your business is sustainable. It prevents you from ending up in that situation, which many childminders sadly do, where you're actually subsidizing your business out of your personal money. Excuse me, I just need a sip. Good financial management is also really important. We found we had a lot of childminders during the pandemic when the government announced various grants for businesses to support businesses through COVID. But you needed to be able to very clearly evidence your income, your business costs, and how those had changed from pre-pandemic to during the various lockdowns in order to prove that you needed the grant. So a lot of childminders didn't manage to actually get any grant income to support them through lockdowns because actually they didn't have that information that was a requirement. And finally, we've mentioned the old tax man a couple of times through this webinar. Having good financial management in place keeps the tax man happy as well. So we all want that. We don't want the tax man on our back. So what does that look like? Well, there are a couple of things I want to mention. So first of all, keep your business finances separate from your personal finances. Don't mix personal and professional finances. So that means having a separate bank account for your childminding business. Now, I am not suggesting here that you go and open what the banks call a business bank account. The reason for that is that banks make more money from the fees they charge on business bank accounts than they do from any other part of their business. So all I suggest you do is just have a separate little personal bank account that in your head you call your business bank account. So I have my normal day-to-day household bank account with one bank, and I have another current account in my name, which I call my Flourishing People bank account. So all my business stuff goes through that account, and that keeps it nice and clear. Make sure that any money that you take in cash in fees is actually put through the bank account. The tax man gets very nervous about cash-based businesses and much more frequently carries out investigations of cash-based businesses, because we know that with a cash-based business, some of the money doesn't go through the books. It goes straight into people's pockets. So in the past, they've decided they're going to have a blitz on investigating people like car mechanics or taxi drivers or hairdressers, people that typically take quite a lot of their payments in cash. They haven't looked at childminders yet, but it could well do in the future. Treat your business as a separate entity. So really, in your mind and in practice, think of it as you are working for your childminding business. And in the same way as if you were working for another employer, the income, the personal income you would get from your business would be wages or a salary, and covering the cost of any business expenses that you have to pay with your personal credit card or out of your personal pocket. So it works in the same way. So this is what it should look like in practice. So you'll see here, I've got my two bank accounts. I've got my personal bank account and my business bank account. So what happens on my business side of things is that's where all my fees go and my funding and any other business income. So if I'd got a grant for COVID, for example, that would go into my business bank account. And then what comes out of my business bank account is all my business costs. So things like my insurance and my registration fees and my equipment and all of those things that we have to pay to run the business. What also comes out of my business bank account is my wages. So what I want to put in my own pocket, which in legal terms is called drawings, and also expenses. So let's think about the personal side of things and what that might look like. So with my personal bank account, what goes into there is my personal income from any other employment and any benefits I might receive. And also my wages, my drawings that I take from my business bank account, and my expenses that I reimburse myself for. So what might that look like? Well, in my business, my expenses might include having to buy paper, stationery, because I provide handouts for people that are attending courses. Now, I probably don't do that shopping separately. In fact, I definitely don't. I buy it through my Amazon account when I'm buying something else off Amazon, to be honest with you, or I buy it in Wilko when I'm shopping in Wilko for something else. So I'm paying for that out of my own pocket on my personal credit card. So I want to make sure that I take that business, that money back from my business. So every month, what I will do, just as if I was working for somebody else, is I just work out what have I bought in my own bill, my own name, that actually was for the business. And I take that money out of my business account as expenses. Okay, so if you do your food shopping, as I know you do, and you buy things for your household, your normal family, and you also buy things that you're going to use in your childminding business, then work out what proportion of your bill is for your childminding business and take that money then out of your business bank account to reimburse yourself for those expenses. And that really keeps it real business-like. So that's the way that you would operate on that basis. So the second thing to say about good financial management is make sure you've got a system. So set up a system that you know you'll stick with. It doesn't matter what sort of system it is. It can be just on Excel, which is how I do mine. I have done for 20 odd years since I started running my business. Or you could buy in a special system like some of these special accounting systems like Xero and, you know, all of these kind of things. There's lots of those about. Doesn't matter what system you use, so long as you stick to it and make sure that you allocate a regular time every week, every month to deal with your financial admin. Don't let it pile up because it then becomes a real stress. File your records in logical order so that when you need to retrieve them, you can do. So if they're paper records, that literally is as simple as having some plastic folders and labeling them and putting all your receipts in there and all your invoices in another one, so that you've got that all in order. If it's computerized records, digital records, then make sure you've got separate folders set up on your computer. Take particular care. I've already mentioned cash transactions. Take particular care to make sure cash transactions are properly recorded. Make sure that you deal with late paying customers promptly. So be systematic and businesslike about that, to make sure that you don't allow customers to start running up a debt. And I would absolutely recommend computerizing your records rather than trying to do it all on paper. And as I say, Excel works really well for most small businesses. You don't need anything more complicated than that. If you don't know how to use Excel, there's loads and loads of free online tutorials on how to use Excel. So I'd absolutely recommend that for you. There's lots of advantages. So the next thing to think about in terms of good financial management is to make sure that you keep all your information secure. So some of this is very obvious and we should be doing it anyway, but I'll just remind you, make sure you use strong passwords. If you've got a system, like I'm an Apple user, and Apple will automatically create gibberish passwords for me, and I don't have to remember them because the Apple system does it for me. Don't share your password with other people in your family. So if you use a particular computer or tablet and other people in your family use that, use a separate password for parts of it that have got your business information. Protect financial information from the naughty people out there that do internet scams, phishers and hackers and viruses and things. So have good antivirus software and make sure that you get it automatically updated. The reason for those updates is to keep you safe and secure from whatever the latest threats are. So set it to automatic. Shred any sensitive documents before you recycle them. Make sure you keep a regular, ideally automatic electronic backup and or a paper backup of all your financial data off-site. So why off-site? Well, off-site may matter because if something dreadful happened, say you had a fire at your home and your computer went up in flames and everything's on your computer and your backup is in your desk. I know lots of people say, oh yes, I back up to this portable hard drive and I keep it in that drawer and it's locked. Well, that's no good if your house is on fire. So maybe look at storage off-site. A lot of automated backup systems, which are not terribly expensive at all, actually hold your data somewhere in a server elsewhere. If you do use that kind of system, do check. It's probably cloud-based. Do check how easy is it for you to then get your data back. Store any financial records, including any supporting information and documents like receipts and things like that, in a fireproof box. And you need to keep the current financial year and the previous 6 years, because that's what HM Revenue and Customs have the right to investigate. Why do I say a fireproof box? Because I went to see one particular childcare provider, and she very proudly said, yes, we were ever so proud. We kept all our records in, you know, these big cardboard boxes, banker's boxes that you make up, and we keep them in the loft above the garage. But she said we had a bit of a disaster, big disaster actually, because the taxman decided to come and investigate their business and asked for, you know, we want 2019 and 2018's records, please. And she went, yes, I can go get those for you. And up she went into the loft above the garage to get the boxes. Squirrels. Squirrels had spent several years nesting in those boxes, and she basically had 6 boxes of shredded paper. Now, in that situation, the taxman estimates what they think your income was and what they think your expenditure was. And believe me, they never estimate to your advantage. It's always to their advantage. That particular investigation cost that particular childcare business £40,000. So let that be a warning. Squirrels, fireproof box. Finally, make sure that you do with your records and your security comply with GDPR. I'm sure you know all about that in terms of keeping sensitive data safe and secure. Okay, last couple of things to talk about are, okay, if you've done all of that stuff that we've already talked about and things are perhaps okay, but you could make it better, what are some things you could do to actually improve your financial position? Well, it's kind of one side of the scales or the other. It's either reducing your outgoings or improving your income. So here are some thoughts. Reduce your outgoings by setting yourself a budget and sticking to it. Reviewing your expenditure regularly, so doing all those calculations regularly and seeing what you're actually spending your money on. I had one provider who did a really detailed analysis, and she came back to me, she sent me a message and she said, I can't believe it, how much money we're spending on sand. So she was then she went and bought herself a sieve and started sieving the sand and reusing it. Compare your forecast, what you've predicted you're going to earn and what you're predicted you're going to spend with what actually happens. That's particularly important at the moment with rising inflation and particularly rising energy costs and food costs and everything else. You may have worked your figures out on the basis of this is how much it's going to cost you to run your business over the next year. And for all of us, it's likely to be significantly higher. So we may all of us need to look at increasing our fees in order to cover our costs. And finally, you might want to look at changing your suppliers. If you're not getting a good deal, maybe look to go with somebody else. And that applies obviously for your energy providers and for anything else that you're buying on a regular basis. But do remember, cheapest isn't always best. And then finally, you could improve your income by doing things like doing some marketing to make sure if you're not full that you do operate to full occupancy, that you do make sure you collect any money owed to you promptly. Don't let your parents run up debt. It's not helping them and it's not helping you. Identify other sources of income. So are there things that you're providing as extras that you really ought to be charging separately for? And you may need to think about increasing your prices. As I say, at the moment, we're starting to live in inflationary times again, which we haven't done for 20 years. So we may need to think about price increases. So if that's not something you're used to doing, here are a few thoughts for you about that. So first of all, make sure that regular price reviews are written into your contract. Probably once or twice a year would be recommended. Think about whether the rate you're charging for your fees needs to change. So do that break-even calculation. Predict it forward in terms of the increases that we know are coming in terms of our energy costs and things of that sort. And think about whether in the next time we do a price review, we need to up our fees. Check that you're charging for any extras that you're allowed to. If you do need to increase fees, make sure you give parents advance notice, because obviously they've got to budget personally as well. So most of us try and give kind of a couple of months notice, sort of half a term's notice, that sort of thing. When you do increase your fees, do explain why you're having to do that, but don't apologise for it. Be businesslike and assertive. Yes, explain to them, you're probably, in terms that they will understand, you're probably finding your energy costs have gone up an awful lot, or they have for my childminding business as well. So that's why I'm going to need to charge you some extra to cover the costs in order that I can keep the business going. So that's a final thought about increasing your prices. But do remember, if you're charging parents fees, there are things that can help them. Make it easy for them to pay you. And that's about tapping into the tax-free childcare provision. I'm not going to go through the criteria because they're the same as your 30 hours criteria. You know what those are, but I just want to give you this headline. In September 2020, the government announced that the DFE had to give back to the Treasury £1.75 billion. To say that number again, £1.75 billion. That money was money that the Treasury had given the DFE to support parents and support childcare settings through the tax-free childcare scheme over the previous 3 years. And it wasn't used. And because this is ring-fenced money, the DFE isn't allowed to spend it on anything else. If the money isn't used, it just has to get given back to the government to spend on whatever else they want to spend it on. Please don't let that keep happening. It happens every single year. There is a massive underspend in the tax-free childcare budget. This budget was negotiated to enable us to support working parents and also through that to support childcare providers through the fees that working parents pay to them. So please make sure that your parents get that money and ultimately that you get it yourself. Okay, so that brings us to an end of today's webinar. I hope that you have enjoyed that, and I hope it's given you some homework to go in and kind of do for your own setting. So a reminder of some of the things that you might want to do. Have a go at completing that SWOT analysis, and you'll find some guidance notes on the C-Zone that help you to complete that 7S analysis part of it, and then to take your SWOT and turn it into an action plan that will support your business. Have a go at calculating your break-even price using the process that I used in the example. And do check out on the C-Zone, East Sussex have created a business plan template for childcare providers. It's not specifically designed for childminders, but you can adapt it to your needs. So for example, if you don't employ anybody as an assistant, you don't need to fill in the staff section of that business plan. But it's a really good template for just summarizing all of your plans for the future, and will provide you with a really powerful and valuable sat-nav to take your business forward. So I wish you well with all of that. And just as a reminder, I've been Jacqui Burke from Flourishing People. So thanks and bye for now.